Good morning, everybody. My name is David Marsh. I'm the chairman of OMFIF, and it's a great delight for me to introduce another session of our regular series of the future of the euro area. I'm doing this from Berlin. You can see Robert Orfel already, who is in Paris. So this is a genuine European type of get-together. I should be saying a few words just to introduce the session and also to guide you through this. We go on for now 2.5 hours, and there'll be a break in between. Robert Orfel, who you can see already, will be saying a few words in about 10 minutes from his point of view as the chairman of the OET, des marchés financiers, so the French supervisor in Paris, with a lot to say about capital markets union and the different institutional arrangements that Europe is putting together. Then we will have a session on the macroeconomic situation with 4 panelists who I will introduce after Robert has finished speaking. He will be speaking for about 35 minutes, including a conversation with me. And we'll have a break after that. And then my colleague Ellie Groves will be taking us through another session, which will last also for about an hour, on the central banking toolkit and what is being done, particularly in the area of ESG. I'd like to say from the outset how pleased we are also to benefit from the cooperation of Amundi. And we'll be hearing from Amundi later on in the form of Didier Borowski from Amundi. But just a few words maybe about the macroeconomic landscape and where we are now. I'm sure we will be concentrating a great deal on the ECB Monetary Policy, which has been reshaped over the last few months. We had the strategy review, which was not surprising. It ended up by saying that the ECB is now heading towards a target of 2%, a symmetrical target over the medium term. We've had a bit of precision on that because the Governing Council decided just a few weeks after to have a relatively restrictive view about when 2% is actually reached. There's 3 or 4 conditions on this, that it has to be reached in a durable fashion. It has to be reached well before the end of the projection horizon. And also we have to imagine that it's going to carry on in a sustainable fashion after the end of the horizon. So quite a few restrictions regarding when the ECB might start to tighten policy, both from the point of view of the asset purchases, the net asset purchases, and also, even more importantly, raising interest rates. And I'm sure there'll be some discussion about that. The central banks have been saying that the inflation spike that we've been seeing just recently is, quotes, transient, end quotes. There's been some feeling lately that maybe the use of the word transient is itself transient. And we've had some remarks from Isabel Schnabel from the ECB board just very recently indicating that the ECB may be taking a somewhat less benevolent view about inflation for next year. And the IMF this week have been using a few adjectives in quite a strong way to say that central banks should be very, very vigilant in looking at the inflation risks. We do see these supply shortages now feeding through, and maybe this will be a durable phenomenon. I myself feel there is a danger of an earnings price spiral of some sort, so at least in some sectors, in some countries. So I don't think we can be complacent about that. A few words about the German coalition. As you all know, on the 26th of September, there was an election in Germany. There will be a new coalition. Mrs. Merkel is bowing out. It could well be that there will be a new German government before Christmas. So it could be that the German parties will get their act together rather more quickly than they did 4 years ago after the previous election. And it does look odds on as though Mr. Scholz, the rather dour, rather serious-minded finance minister, will be the new chancellor at the head of a government with the Greens and the FDP. They're getting on quite quickly with what they call these pre-soundings, and they've got into the soundings for a coalition, and they might start the real coalition negotiations as early as next week. Mr. Scholz has spoken quite recently about the need to have a new government in place as quickly as possible. I think that's clear also because Germany does take over the G7. So that's something to look forward to as well. Longer term, there's a lot of issues I think that Europe does face, and we will be talking, of course, in this session about the future of the euro area, not just about the monetary policy aspects. There's the issue about the next generation EU fund, whether or not this could turn into a durable institution. Mr. Scholz, who I mentioned just now, has actually spoken about this being a Hamiltonian moment, going back to the time 200 years ago when Alexander Hamilton did forge a genuine tax and spend regime and a borrowing regime for the rather young United States of America. Will we see this? Will we see this becoming durable? The legal position at the moment is that it should not be durable. Certainly the Next Generation Fund has been an enormous success up to now, particularly in terms of funneling money through to countries like Italy, who are now making good use of this extra money. As you all know, the European Commission has started the heavy borrowing program now, and this could give the euro another shot in the arm as a standard reference currency on the world markets and as a genuine number two to the dollar. So that's something we will be talking about as well. The demographic issues, which are burdening all European countries, how will the pension system be reformed in coming years to take account of the fact that the baby boomers are now retreating from the workforce? Can Europe now build a banking union and complete it to fulfill the founding ambitions of turning Europe into a genuine financial area? That's something which I know Robert Ophel will be speaking about. Capital market union. Can Britain, now on the outside of the European Union, can Britain play a constructive role in the capital market union? How do you forge a capital market union now with Europe still quite split up in lots of ways regarding the financial markets? Can Germany, with Mr. Scholz's help perhaps, overcome its reticence about having a full European insurance system for bank deposits? That's an issue that Mr. Scholz, in his time as finance minister, did try to push forward in November 2019, before the pandemic. And so I'm looking forward to seeing whether a Scholz-led government will provide some further impetus there. The whole issue of the pandemic, of course, and getting over this very difficult spell, and whether or not the ECB will continue with an ultra-expansive monetary policy. How well will the financial monetary policy coordination work as Europe recovers from the pandemic and moves into a pretty high growth phase for the time being? Will that prove durable? Question mark. So all these things are overshadowing us. I'll just like to mention two other things. One is the spike in the gas prices, which is certainly adding to the inflation worries. Will Russia use this leverage it has now over gas supplies to Europe, particularly to Germany? Will the Germans rethink their attitude on nuclear power? We've had Mr. Macron just very recently telling us that smaller nuclear power stations has to be part of the French energy mix after 2030. That's anathema to Germany right now. So that's an important question on energy. And the second question, which I know will overshadow and come into our discussions for the whole time today, is the question about ESG and the formation of a new energy mix for Europe and for the world as a whole. The need to reduce carbon emissions, that's been put onto the front burner much more than people had expected during the time of general environmental consciousness during the pandemic, partly because of some extreme weather conditions as well. So marrying ESG criteria with financial markets and the role of the central banks, whether the central banks are taking on too many risks or maybe not enough risks in some of their open market purchases. That's going to be an issue, I know, for the discussion we're having on the toolkit, which will take place in the second half of this session. So that's more than enough in terms of words of introduction. What I'd like to do now is say some words to just set the scene for Robert Ophel. He's been at the Autorité des Marchés Financiers now since 2017. He was at the European Central Bank in many different roles, but his most exalted role before was between January 2012 and July 2017, when he was the second deputy governor there at the Banque de France. and he's been involved in economics and international relations. He's had a spell at the Fed. And Robert, if you'd like to switch on your screen, the floor is going to be yours, and you're going to be talking, I think, about a whole range of different issues, including some of these questions concerning capital markets union, what the French plan is for that, but also for some of the reforms of the financial market supervision. I'm sure you'll say a few words also about banking union more generally. So, Robert, we're delighted to have you here. My only source of displeasure is that we can't be meeting physically, but we'll be doing that again, I know, before too long, in either Paris or Berlin or somewhere in between.
So Robert, even in London,
in London, if London is allowed.
In London, I'm ready to.
Good. Okay. Well, thank you for being so brave. And the floor is yours, Robert. Looking forward very much to what you have to say. And then we'll have a little chat after you finish. And we'll also invite questions from the audience. So anybody who's got a question, please do put it in the chat function. So Robert, welcome.
Thank you, David, for your kind words. It's fair to say that the financial markets regulatory agenda is currently somewhat overcrowded in the EU. Of course, many of these regulatory issues are also on the agenda of other jurisdictions, be it the UK or the US, but due to the specific EU regulatory process, where regulatory proposals are taking a fair amount of time before being finalized and implemented, they are piling up in the EU, and the slack is really big, if I may use this word. Let me distinguish three types of regulatory challenges. We have those that could be covered by regular reviews of existing regulations, and they are needed, these reviews, in order to improve them on the basis of the track record. It could be the MiFID review, the IFMD, the LTIF review, the CSDR review, and even the ESAP project. We have those challenges which are deriving from new issues, such as sustainable finance with CSRD or digital finance with MiCA and the DLT pilot regime. And finally, we have those challenges who could be viewed as an implementation of what we call now in the EU open strategic autonomy policy stance, be it in the field of information and communication technology with DORA, or with regard to some key market infrastructures such as CCPs. I will not bore you with a detailed discussion of each reform, but just try to illustrate how properly finalized some of them could shape the future of EU financial markets and should be viewed as decisive steps in the direction of a tangible capital market. First category of regulatory reforms dealing with well-known issues and where we already have a good basis that only needs to be improved. I will put in that pot the consolidated tape, the LTIF regime, and the ESAP. We should not fool ourselves. The consolidated tape is not a silver bullet, but by starting with post-trade console tape for equity, with the timely addition of pre-trade data, and moving to a console tape for bonds, this would facilitate best execution, to some extent narrow the competitive gap between large and small market players, marginally reduce the cost of data, concur positively with the price formation mechanism, facilitate the valuation of assets, and materialize the CMU. To make it possible, I believe that requesting mandatory free of charge contribution by trading venues and APAs, and accept to review the requirement to provide post-trade data free of charge after 15 minutes would be game changers. This will be part of the MiFID review, which is indeed a very welcome opportunity to fine-tune a regulation that is key to structure of financial markets, and deliver consolidated tape will palpably illustrate the CMU in that perspective. I observe that in parallel to the EU MiFID/MiFIR review, the UK has launched a consultation on the very same perimeter, supporting the current framework. But when you read the paper with a certain disinclination, judging by the number of times the word however is used in this consultation, 42 times, if I'm not mistaken. I will mimic this stance. MiFIR is a very fine regulation. However, it is overly complex and has not sufficiently delivered to achieve the good price formation mechanism we had in mind when drafting this regulation. How to increase this efficiency? Consolidation Tape would help, but I would also advocate for a drastic simplification of the framework. Equity and bonds are nevertheless of different nature. With regard equity market, we could first limit the transparency waivers to large in scale orders and orders held in order management facility, removing the reference price and the negotiated trade waivers for liquid and illiquid instruments. Combined waivers would therefore no longer be relevant, and the famous double volume cap would become pointless thanks to the simplification of the waivers. We could also limit the trading via systematic internalizers, SIs, to transactions above the pre-trade large in scale threshold. I do believe that only orders of a relevant size deserve the protection of a transparency waiver, and that small orders are more useful for the price forming mechanism and for best execution if we put them on a lit market. The bond market is a very different case. Continuing to the Consolidation Tape story, it is striking that many market participants and public authorities are indeed prioritizing consolidated fixed income data. The underlying rationale for such a priority is clear. Bond markets are far less transparent than equity markets. A very large proportion of trades is executed OTC, without standardization, and transparency requirements are very loose. Taking this feature of the market into account, developing a consolidated tape based on the current transparency requirements would be of limited benefit. I suspect also that for some of the proponents of putting the bond tape first, this may be a way of postponing the equity tape sine die. Actually, before setting about to develop such a tape, we should first review the transparency framework. And while the pre-trade transparency framework is relevant, it is the post-trade framework that is key for bonds. Here again, I would advocate for simplification, abandoning the size specific to the instrument as the SSTI waiver, broadening the perimeter of the liquid instruments by jumping immediately to stage 4 of the liquidity determination process as foreseen by RTS number 2, and requesting publication of post-trade time with volume masked for illiquid instruments only and list transaction with a deferral of the volume after a short standardized period of time covering both private and public paper. There will be no longer any national option. Obviously, due to the specific and highly competitive nature of the bond market, and let us not forget, we have a trading obligation for equities in the EU, and also for derivatives, whereas there is no bond trading obligation, and I will not advocate for that at this point. And due consideration should be given to possible unintended consequences of this type of reform. Nevertheless, improving transparency while preserving the legitimate interest of liquidity providers can only boost the liquidity and the attractiveness of EU market. The review of European long-term investment fund frameworks, the LTIF, is an opportunity to develop an EU-wide financial product allowing retail to invest in non-liquid assets. At a time when so many infrastructure financing and venture capital are needed, it is really key to enlarge the investor base and share more broadly the benefit of higher return. When you address retail customers, liquidity of the product is very important. I do believe that the new LTIFs could propose some liquidity to these investors, either by developing a secondary market or by allowing redemption in a carefully framed way, either with the appropriate frequency, be it monthly or quarterly, and the appropriate gates. The European Single Access Point, the ESAP, for both financial and non-financial information will also be a significant step towards a market union. It would be especially useful at a time when non-financial information is expanding rapidly and when ESG data are becoming more and more important and, by the way, costly in the investment selection process. Moving to the new territories, the regulatory frameworks currently developed in the sustainable and digital finance areas are also very significant steps towards a meaningful capital market union, sharing the very same standards. The Corporate Sustainability Reporting Directive and the currently Level 2 regulation developed by EFRAG are very well advanced. I am, for example, referring to the recent climate standard prototype, which was released by EFRAG. And it is also an interesting legislative case where Level 1 and Level 2 advance in parallel. Delivering on this issue at a time when international standards are also heavily discussed under the umbrella of the IFRS Foundation illustrates what we precisely have in mind when advocating for the double materiality and when we consider that the contemplated international standards could be very relevant, but a very relevant baseline, but are not sufficient from an EU perspective. Finally, the concept of open strategic autonomy has progressively expanded from the security and defense dimension to many other areas, such as energy, healthcare, and with the UK exiting the EU, to the financial services. Actually, one could suspect that it is a sort of catch-all or portmanteau concept where almost anything can be hung, maybe hiding protectionism with the finery of openness. It should be just the opposite. If you carefully identify your most strategic dependencies and concentrate your effort on them, I do believe that this is a very fruitful concept that could shape the EU agenda for the next few years in the financial services area too. In that perspective, full dependency on third-country IT services providers, cloud computing, for example, or on the third-country clearing for financial instruments denominated in your own currency are highly problematic. While full relocation does not make sense, a more balanced state of play should be pursued. It cannot be a short-term target, but regarding clearing, where the equivalence clock is ticking right now, I do expect that continuity with the current situation will prevail, provided a shift of part of the euro business is effective in order to ensure a critical mass of clearing in the EU. The end of the pension fund exemption could, at some point, be the appropriate opportunity to accelerate the move. If not, a removal of the equivalence for client clearing would be inevitable and would be detrimental to all stakeholders. As you know, France is taking the EU presidency next year for one semester, the first semester. No doubt that on all the issues I've mentioned, we will try to give a decisive push in order to reinforce the effectiveness of our union. And David, I will stop here to open possible discussion on what I've just mentioned on our other issues. I am in your hand.
Thank you very much, Robert. That was very, very thought-provoking. And I didn't know exactly what you were going to be saying in advance, but I think you've very much lived up to our expectations. you seem to be putting forward, in some ways, a very bottom-up approach towards the reform of some of the regulations, and went into a lot of very interesting detail about, say, some ideas for introducing infrastructure funds to retail investors. And you're quite right. There should be an opportunity for retail investors to become accessed to some of the greater returns, which could well be forthcoming, say, from private equity type instruments or non-liquid. And you spoke about the prospect of maybe making some of these susceptible to redemptions with gateways and so on. How much collaboration is there at the moment between, let's say, major financial services companies in Germany, in France, and in Italy, let us say, in order to bring about some genuine meeting of minds at the practitioner level? Because I think ideally you would want some of these instruments to be on sale in post offices, you want them to be on sale in retail banks, you would want the ordinary man and woman in the street to become acquainted with these instruments. You would also, of course, have to bring in consumer protection, you'd have to guard against greenwashing and things like that. How much practical collaboration is going on between the financial services companies in that sphere, please, Robert?
Actually, what I've mentioned about the necessity to have a retail base investing in this type of products, which should not be reserved to institutional investors or family offices to some extent, but could be interesting for a much broader customer base. And to some extent, it's also an issue of democracy to allow the people to enter this type of product with the appropriate investor protection mechanism. It's already possible at a national basis right now. We have done that. We are trying to do that in France. But as you know, for this, what we call them, it's alternative investment funds. You can passport them in the EU for institutional customers, but not for retail. And the idea is now with LTIF to have a EU product which could be passported and then address a much broader customer base than just the national one. And of course, you have to take some retail clients have specific, let's say, vulnerabilities. So you need to address that. And you also know that at some point they will not embark in this type of products without any ideas that they could have some liquidity on their investment. That's why we need to carefully frame this idea. And I just mentioned two lines which are either treat them as open funds, but with an appropriate liquidity framework, meaning you can redeem every once a month or once a quarter, something like that, with the appropriate gates. If you embark in this, I advocate for an ESMA supervision.
Right. Okay.
In order to avoid having national approaches, which will be different, but nevertheless with a passport on the whole EU.
Well, thank you. I can see the contours there. This is something which we must keep in touch about, because it's really vital that this kind of bottom-up approach, as well as the top-down approach, is prevalent. I've got a question from the audience, very much following on from what you had to say about MiFID, and this is from Matteo Cominetta. So he says the lack of MiFID pre-trade transparency and inadequate UCITS requirements in terms of exchange listings, he says, are a major limitation to the development of a pan-EU capital market. Is reforming these issues a priority for the AMF and EU market regulators? Question mark.
It is indeed. It is indeed. That's why I try to advocate for simplifying the pre-trade transparency framework, just by increasing the transparency, by suppressing some of the waivers which are now in force, and you can escape the transparency through these waivers. And at the end of the day, if you simplify the waivers framework, you can suppress some type of mechanism we have introduced, such as the double volume cap. That's it. If you do that, by the way, the pre-trade consolidated tape will be much more useful, because you will have much more information in it. You have mentioned the UCIT issues, how there are two ways of dealing with this issue, which is either there are ETFs, meaning with a liquidity at any time, or it's just a way to trade the UCIT at the end of the day valuation. That's two different avenues, which different mechanisms. Both are relevant for different purposes. But when you look at this issue of transparency, it's very different from the equity world and the bond world, because the liquidity is not the same. That's why pre-trade transparency is very important for equity. Post-trade is very important for bonds, to some extent.
Well, this is another area I'm sure that we can deepen, and I'm sure Mathieu and his colleagues can also get in touch with you and your service to deepen that question. And indeed, that might be an area where we could bring a party of interested people to come to see you in Paris to have an even more granular discussion.
Around these questions, there is also the idea: how do you want your market behave? What's the core of the market? Should it be the lit market, or should it be systematic internalizers to some extent? That's very different models. We need both, but the relative part of each of them is really important. And to some extent, I don't know, but I have the impression that in the UK, they are putting more importance on the systematic internalizer intermediation, when we try now in the EU to enhance the lit market.
Yes. Well,
I don't know if it's true, but
I don't know the answer to that either, but it's worthwhile trying to find out. Quite a lot of your speech was, I thought, quite a good diplomatic exercise in trying to marry together and synthesize different approaches. You spoke about MiFID and you spoke about MiFIR, and you said MiFIR was a very good regime, but it was too complicated. You've gone to the trouble of counting up the number of times the British friends have mentioned the word "however" in their assertions, 42 times. Do you actually think that everybody being sensible and everybody wanting the European markets as a whole to become more efficient, do you think that there is a benevolent meeting of minds between the British approach, which clearly after leaving the EU is now quite keen on emphasizing divergence, and the continental European approach, which is more keen on emphasizing solidarity? Since we're all interested in efficient markets and we're all interested in increasing prosperity, is there a genuine meeting of minds that could be brought about here?
I do not expect that many divergences between both. To some extent, there will be nuances, but in financial market, nuances could make a difference, I should say, even if you And that's why, to some extent, we should always keep in mind this idea of open strategic autonomy to some extent. Open is very important. That's, you should have the balance. But in some cases, meaning on strategic issues, you need to be able to do it on your own. That's
well, of course, this again is another subject for greater conversations and greater deepening. You mentioned clearing right at the end. That's been a rather totemic issue, and a lot of people have written about that and made headlines and tried to turn something very complicated into something quite simple. You said, I believe, Robert, just now that you felt that continuity would prevail, but on the other hand, there has to be a critical mass of clearing that is done for the euro on the European continent. And there was a slight degree of threat, if I may say there, because you did say, well, the equivalence regime could be changed quite quickly if there wasn't some transition towards what you called a critical mass. Could you spell that out a little bit more? Because it's really very interesting what you had to say there.
No, of course, it's a tricky issue, and I try to remain very prudent on it, because when you look at how many institutional bodies are involved in such a decision, it's you have the ESMA, you have the EU Commission, you have the ECB, you have the ESRB, Central Bank of Issues, and then it's also a political issue in some cases. But let's put it that way: there is no short-term target. This is a medium-run target, because there are issues where you can't move things. When you decide for trading, for a trading obligation, you move flows immediately, very rapidly. When it's clearing, it's totally different. You need to be very prudent and avoid any cliff effects or disturbing decision. So in my mind, it's a medium-run target. And I just mentioned the opportunity of, right now, pension schemes are exempted of mandatory central clearing. It's a temporary exemption. At some point, it will be removed, and probably relatively rapidly. We will have to see. In the UK, for example, it has been extended to July 2023. But let us imagine that in July 2023, we will abandon this exemption. So we will have new flows coming to the clearing. And we could imagine, especially in the AU, that these new flows will mainly be denominated in AU currencies, in euro. So there is an opportunity to rebalance a bit the picture. And what I just mentioning is that if we can't achieve some ideas around this rebalancing, and I fairly know that many European banks are ready to rebalance part of their business, part of it, with especially with local clients, provided they can still be market making activity to ensure the effectiveness of the price formation and the effective and the quality of the quote. So I'm relatively optimistic that we could embark in some type of rebalancing.
Yes, I think that's very wise. And we are talking about gigantic stocks, but we're also talking about new flows, aren't we, in the way that you have just been talking about. So this is a dynamic landscape. This is not static. Do you have the feeling that the rather unfortunate overall meteorology between the EU and Britain in the last 2 years over, say, the Northern Ireland Protocol, has that had a contaminating effect, would you say, on the approach towards equivalent? We all know that you are people who are not guided by day-to-day politics, but nonetheless, there's this overall atmosphere. Has it had an impact on the way that you talk to your counterparties in, say, the UK?
I can't say there isn't any impact. But basically, when I've mentioned the institutions which are part of this decision, that the ESMA, that the ESRB, that the Central Bank of Issues, and especially the ECB, they are independent bodies, and they will have to make the assessment and the proposal. The Commission will have after that to decide, but it's mainly, first of all, it's managed by people who have in charge the stability of the system and the effectiveness of the system. So it's, but let me rebound on that. It's precisely because there could be some strong political interference at some point, either in the UK or in the EU, that we need to implement this open strategic autonomy, not to be completely in the end of something which we cannot interfere with. It's
no. I see your point. When this actually goes onto the politicians' desks, then you don't want this all to be torn up or rejected, do you? It has to be something which fits in to the political landscape. Could I ask you quite a tricky question now concerning open strategic autonomy? And this is the issue about ESG taxonomy, which is going to be very important, not just for these retail products we spoke about right at the beginning, but above all for institutions. The whole issue about greenwashing, which Ignazio Visco, the governor of the Banca d'Italia, brought up quite recently, just talking about the lack of standardization. In areas of, say, gas and nuclear energy, and I mentioned both of those issues in my opening remarks, there are differences of opinion at a very high political level between France and Germany. And this is going to affect the way you deal with investments in, say, gas-fired power stations or nuclear technology of different sorts. This is going to affect the taxonomy here, not just between France and Germany. There's 4 other countries that agree with Germany on the nuclear issue. How do you think you, as a regulator, are going to get over some of these deep-seated political divergences?
We are not standard setters to some extent. We are contributing to this standard setting process, but we are not the standard setter. And basically, I'm relatively optimistic that these standards, they are coming, they are in the pipe. Of course, there is a hurry, but I do expect that, let's say, at the end of next year, we will have a good basis in order to be very efficient in avoiding greenwashing. Then you mentioned gas and nuclear. First of all, gas, it's a too broad category. You have the conventional and the non-conventional.
Yes.
So to some extent already, our answer from a supervisory point of view is transparency on what you are investing in, but for financial products. But it starts with the issuers themselves. That's why the first step is to be sure that the issuers are providing the right information according to agreed standards and with data which are verified and of quality. That's the first step. And then we will ask them to explain what are the ultimate target and how they will get there. Let's put it that way for carbon issuances, carbon emission. That's carbon emission. That's what do we have? And it's interesting to see that in the EU we have not yet the corporate sustainability reporting directive in force. It's in the pipe, but it's not in force. But we already have the regulation on the financial intermediaries in force. which is to some extent it should be the opposite, because there is a timing issue. But I'm fairly confident that at the end of next year it will be solved.
Well, thank you. Yes, it's interesting and useful that a number of those building blocks are there. We could go on for much longer, Robert, but we have to end now because we've got our next panel already lined up to go forward. But thank you very much indeed for issuing us with a kind of amuse-gueule for the rest of our discussion. And it's been absolutely fascinating. And some of these granular issues where it's a question of nuances, as you say, nuances can be politically very, very important. So we're very grateful to you for just lifting the veil on these issues. And we do hope very much that we're going to be able to deepen that discussion with you.
Thank you, David. As you understand, some years ago, we tried top down. Now we try bottom up.
Yes.
It could be more efficient.
I think you're absolutely right. We've got to learn all these different acronyms, but we will do that. So when we see you next, we'll have an even better discussion. But thank you very much indeed for introducing us to this. And of course, if you would like to do stay on the line where we're going to be switching over to the macro.
I will listen for some of the part of the discussion. Thank you, David.
Thank you. And also your remarks that you made, if there's a written form, we can put that onto our website so people can actually see it in the full flowering of what you had to say, because I do think it's very important. But I'd like to thank you on behalf of everybody, Robert, for kicking off this session and for being so kind as to give us your time. And we look forward to deepening the discussion with you in future months.
Thank you, David. Bye-bye.
Thank you very much. Good. So, ladies and gentlemen, after that regulatory introduction, we're going to go full scale into the macroeconomy. And as I said before, we've got 4 panelists to take us through the next 1 hour and a quarter. So please do switch on your machines and I will introduce you. And I will introduce you in the order in which you'll be speaking, alphabetically. Riccardo Barbieri, who's the Chief Economist and the Director of Economic and Financial Research at the Department of the Treasury in Rome. We have Didier Borowski, Head of Global Views at Amundi. Amundi has been a constant partner of OMFIF in this Future of the Euro Area program that we started about 4 years ago. We have Dr. Friederike, known as Fritzi, Köhler-Geib, who's the Chief Economist at the KfW Development Bank, with a long international experience, actually, having been at the World Bank for 10 years. And then we have Laurent Marois, who is the Senior Advisor in the Economics Department at the European Investment Bank. And the alphabet has made it the case, Riccardo, that you're speaking first. But I think if we didn't have the alphabet, we would be asking you anyway to speak first, because it is quite clear that Italy is the flavor of the moment. There's been a revitalization of Italy. I've got a friend from the German Bundesbank who goes to Italy now regularly on holiday. And each time he comes back from Italy, he's more and more impressed by a new spirit that's abroad, partly, but not only, because of the prime ministerial change that took place in February. But clearly the EU Next Generation Fund is making a difference. You've got to make sure that this money is spent wisely and well. Could you give us your views, please, Riccardo, from the Italian Treasury point of view on how the stabilization and recovery program is going? It is said that Italy may grow 5% this year, so substantially more than Germany. How resilient is that? And then if you've got time, perhaps say a few words about the political outlook, because new elections do have to take place by June 2023 at the latest. And we also have a presidential change possibly in the next, well, certainly in the next year or so. So please, Riccardo, over to you to give us a view of the Italian economic landscape. Thank you very much for being with us.
Thank you, David. Good day, everyone. How long do I have for this?
Well, I would say about 5-7 minutes.
Okay.
Don't go on much longer than that, but we've got a bit of time since we've got an hour and a quarter for everybody. And Italy very much is the flavor of the moment, as I've said.
Well, you know, I tend naturally, also because of my professional background, not to get too excited, too optimistic, and then too gloomy when things are difficult. And I think this certainly helped me also in my professional role in 2018, which I regard as a difficult passage in recent years, probably the most difficult passage. Obviously, there have been some positive developments. I think the Draghi government has brought a focus on first of all, finalizing the recovery and resilience plan, and then on the implementation. I also think Draghi is very consensual. He's gradually revealing certain aspects of his view of the way ahead for this country. For instance, I thought it was very interesting that in a recent speech at the Industrialists Association, he went back, and I saw that he partly improvised his speech on that passage, and he talked about how Italy experienced very fast growth in the 50s and 60s, and then this so-called miracle ended in the 70s, and Italy found it more difficult to go through the aftermath of the energy crisis. And he said, compared to other countries where industrial relations were much more advanced, constructive, and there was a sense of cooperation. And he called for greater cooperation between the social partners. And recently, when far-right activists attacked the trade union in Rome in protest against the so-called Green Pass, the first thing Draghi did was to go and visit the trade union that was attacked, the biggest trade union in Italy, CGIL, and hugged the leader of the CGIL. And then today he had another meeting with the trade unions to discuss safety in the workplace, because unfortunately we've had a number of accidents in Italian factories or construction sites with people dying because of insufficient safety procedures. So I think gradually he's revealing an ability to lead, albeit without having his own political party and having to take instructions from the parliament. That is quite remarkable, once again. And so my own thought as a citizen, as an observer, is that either our system de facto becomes more presidential, or it would make sense for him to continue in his current role and not to become president. If he became president, as some observers have already commented, he would probably have a bigger cloud on the whole policy process and the political process. And we may have, at least until the next elections, a less visible prime minister, sort of a placeholder, and that would change profoundly, de facto, the way our political system works. I think it's probably been discussed also outside of Italy. There's another thing that's been a recent development I think is important, which is the local elections, where, let's say, center-left candidates have done well. In some cases, they were elected at the first round. For example, in Milan, the incumbent mayor won the first round election with close to 60% of the vote. And this coming Sunday, we have the runoff elections in Turin and Rome. In Rome, the runoff will be between our former minister, Roberto Gualtieri, for whom we have the highest regard, and a center-right candidate who has also said things that are quite worrying about, statements that sounded vaguely far-right in their tones. And I think if someday the center-left candidate in Turin and Roberto Gualtieri become mayor, mayors of Rome and Turin. Essentially, the center-left will have secured Rome, Bologna, Milan, Turin, Naples in one shot. That is a big change. Of course, a lot more needs to happen between now and the next election to see the emergence of a coalition that will support this recovery and resilience plan and this type of reformist agenda after the next election. As you know, the recovery and resilience plan, as I just say this last thing.
No, I want to encourage you to carry on for a moment because it's so interesting, but I just wanted to refine this a little bit. You've spoken quite a bit about politics. Two questions, Riccardo, on this. One is that you've given the impression that maybe Mr. Draghi is getting quite used to being a politician and he quite likes it and he's doing well at it as well. Do you think that he'll manage to actually pull off some substantial modernization and some reform and also get the recovery funds going before the ECB starts to raise interest rates? Because it seems to me there's a bit of a race against time here. I said right at the beginning that the ECB has been quite restrictive in terms of when it will raise interest rates. It's giving everybody quite a bit of time, and I will listen to Didier in particular about that. But there is a race against time in Italy. And then the second question is, the Italian debt has risen very substantially during the pandemic. Is there a real plan to reduce that debt rather than just getting rid of it via inflation?
Okay, so in terms of the race against time before the ECB hikes rates, I think perhaps I wouldn't put it as dramatically in the sense that hopefully our borrowing requirement will fall sharply by the time the ECB discontinues quantitative easing. So the call on the market may be relatively limited. I do agree that we need to improve the credibility of the whole policy plan and of the actions that are taken in order to make our market more resilient. The fact, though, is that in the first 8 months of the year, the average cost of funding was 0.1%. Obviously, it's worse than what Germany has. At the moment, it's probably negative. So we are not benefiting as much as the so-called core countries, but there is a dramatic change if you consider that the inherited implied cost of funding at the beginning of this year was 2.3%. So every year we lose 1/7 of our debt at higher yields and we issue at close to zero. And even if the ECB starts normalizing its policy, it will take time before the average blended cost of funding for that particular year rises above the implied cost, the overall cost of funding. So the cost of funding is likely to decline below 2%. If we can maintain a nominal growth rate way in excess of 2%, then we have, the snowball effect starts working in our favor. And in addition, I'm a complete believer that we need to go back to a primary surplus. Obviously, we need to do it gradually. The view of Mario Draghi and his economic advisor, Francesco Giavazzi, is that we should do it very gradually. They are not in favor of accelerated fiscal consolidation. Our school of thought at the Treasury is perhaps a bit more oriented towards prudence, but obviously then I personally written the latest update of the stability program and I'm their ghostwriter. So we follow the line that the Prime Minister has set, which is we do want to reduce debt. I think there was an interesting twist during the summer, because around the time when the consensus became more optimistic about the growth prospects, I saw that Draghi was emphasizing in a couple of comments he made debt reduction in the medium term. And then by the time we got to finalizing our stability program update, he was less keen on that particular side of the story. So I think what he wants to see is that we are growing not only enough to fill this huge gap that we have in GDP because of the drop of 2020, but then we need to grow, to keep growing in the coming years. And there, my own personal battle within this huge effort to finalize the recovery plan and then put it to work is that I believe this must be the opportunity to activate our supply side, because, and this is true for all European countries, it's nice to install, the recharging points for our electric vehicles, to buy electric rather than conventional cars, and so on and so forth. But if we just buy made in China products, our industry is not going very far. And I think everyone realizes how fragile the value chains have become. And so I think we know, while refraining from any temptations to become more protectionist, at the same time, we must focus a bit more on our interests as Europeans.
Well, thank you. I think that's very well said. And Mr. Draghi, in the way that you said he's harking back to some of the atmosphere of the 1950s and the 1960s, I believe you can have an industrial policy without being protectionistic. And I believe you can have a supply side policy which could be very market orientated as well. So I think that's really quite encouraging. And thank you for spelling out the snowball effect, because that if Italy can get back to a genuinely sustainable growth with the low funding costs that you speak about, that could at least solve the problem. And of course, there's not a gun to the head at the moment. This is not like Mario Monti 10 years ago. People are giving Italy money. They're not taking money away. So Didier, I've deliberately given Riccardo a little bit more time because it's such an interesting subject. But Didier, I know you're going to be speaking not just about France, but also about the whole constellation. I'd like you also to say a few words about what you think the ECB is going to do next, including what will happen to the PEP program. That's an old discussion between the two of us. And also, Fritzi may not be able to say too much about Mr. Scholz because she's being paid by Mr. Scholz as working at the KfW. But you might be able to say a few points of view from the financial markets. What do you expect from a German Chancellor Scholz if he indeed does become the Bundeskanzler? So over to you, Didier.
Yes, thank you, David. First of all, I can't more than agree with what Riccardo Barbieri said regarding what Italy could do. Just want to say a few words regarding the global macro backdrop within the Eurozone. So we've seen a private demand recovery, but the output gap has not closed yet. It's still a catch-up process in many Eurozone economies, and there are clouds still on the horizon. And my point is that, and it's very important to understand that recovery would not have been possible without the support of the policy mix. And there is almost a consensus between policymakers, and I think investors do believe the same, that it's premature to tighten fiscal policy or even monetary policy in this environment. In addition, we have some clouds on the horizon coming from energy prices, from the fact that inflation tends to resurface. Is it transitory or permanent? This is currently the debate. We tend to believe that so far our take, it's not only driven by commodity prices, so there is something more structural that is coming. Having said that, the point that I'd like to make before talking about monetary policy is about fiscal policy. Basically, at some point, you know that fiscal rules were suspended in early 2020 in order to allow Eurozone states to implement stabilization policies. And it was welcome, but they are scheduled to be reactivated in 2023. And there is a consensus among economists that it would be too soon to come back with these identical numerical thresholds. And if you take, for instance, the example of Italy, you have certain countries like Italy where the targets, especially the debt to GDP target, has become too far removed from reality. And it would not be credible, even for investors, to maintain the old rules coming from the Growth and Stability Pact. But it does not mean, and that's something very important, that a new fiscal framework does not mean that we should abandon fiscal discipline. Now, it's very complex, in fact, to build a fiscal framework that is coherent, that maintains the capacity for fiscal policy to to opt for stabilization policies if needed, and at the same time.
Will that be a task? Will that be a task for Mr. Scholz, because he's not done it while he's been finance minister?
It would be a task for Mr. Scholz, for sure, because the next coalition in Germany will be dominated by the SPD and the Greens. It would be a task for all Eurozone governments, because at the end of the day, you need a consensus approach. And it's going to be very complex, even in Germany, because as you know, the FDP will take part of the next coalition and is much more conservative regarding fiscal rules. So it's going to be debated. It was said earlier, France is going to lead the European Union for the first semester of next year. We have the French elections, but it's going to be a hot topic because we need to find an agreement at the Eurozone level. We need to avoid to tighten fiscal policies too soon, but we need to find a coherent fiscal framework in order to maintain, I would say, the sustainability of public debts. It means that we need to look at a battery of indicators within the Eurozone, the debt to GDP ratio, the primary surplus, the gap between interest rates and GDP growth. And one size does not fit all. That's basically.
Can I just ask you, before going on to Fritzi, Didier, just two questions. One is on the ECB. You said it's too early to tighten monetary policy. Do you think, and this is a question on which your whole career may depend, of course, Didier, do you think that PEP will be extended now beyond March 2022, maybe for another 3 months? Would you like to comment on that? And then the other issue is the whole reform of the system, and Mr. Scholz, he's going to put a lot of emphasis on Europe. What would be your list of things that, if he becomes Chancellor with these two other parties, what should he concentrate on regarding building Europe?
Well, the first point will be to find, I would say, an agreement at the Eurozone level on the new fiscal framework. I think it's key. If you look beyond, I would say, 2022, if you really want to think about the future of the Eurozone. That's the first point, I think. The second point is clearly also to restart, I would say, the work on the capital market union, because it's not only about the policy mix within the Eurozone, and the capital market union has not progressed since the start of 2020. And regarding your question regarding the ECB, it's clear that you cannot think about fiscal policy without monetary policy, because fiscal policies would not be possible without the support coming from monetary policy. The ECB, in other words, the ECB cannot stop its PPP abruptly at the end of March 22. So I think the communication was clear that they will find a way to recalibrate these asset purchases in order to maintain stable financing conditions in the Eurozone. I think it's a necessary condition in order to continue to catch up within the Eurozone. You have to think about fiscal policy and monetary policy at the same time. Fiscal policy and monetary policies must continue to support the recovery in Europe. Now, when it comes to the next coalition in Germany, yes, that we may find a more, it might become more easy, I would say easier for the French government and the German government to cooperate, because they are probably more aligned on many issues, and with renewed coordination between France and Germany, it's something that would pave the way, I would say, for something which is more sustainable in the medium term. But we need to see, the French elections first in next April, so it takes time.
Well, that is true. Well, that's a very good point on which to go over to Fritzi. Thank you, Didier. And I'm sure we'll come back to Ricardo as well on this issue about the reforming of the Stability and Growth Pact. But Fritzi, I know you can't go too deeply into the whole politics of the situation, but could you tell us what you think is now the outlook for the German economy? It looked pretty set for, say, 3.5% a few months ago, but we've had these setbacks now affecting the industrial area. The shortages and so on seem to be more developed than many people think. What is your outlook for the German economy this year and for next year? And also, do you think that this inflation spike is really transient and everything will go back to a nice, pleasant future with 2% and nobody should be too alarmed about inflation? What do you think about those two issues, Fritzi?
Yeah, thank you very much, David, and very nice to be part of this discussion. I just would like to make one comment because I think in Germany, as you can imagine, we are as curious and impatient to know what government we are going to have. Irrespective of how the government will look like, I think given that Germany has committed itself to climate neutrality by 2045, it is clear that this topic, the transition to climate neutrality in one form or the other, will be central to what's coming next. And I think this is also true for the European Union as a whole, as we are seeing with the European Green Deal, as we are seeing with Fit for 55. And I'd like to add now a German perspective on this, and then have a look on Europe. And taking the step, answering your question, David, with regards to the impact of the crisis and growth outlook, I think what we can say is that businesses, banks, and the public sector have weathered the crisis quite well so far, but we are seeing traces. And when it comes to businesses, it is very unlikely that we will see over-indebtedness as a whole. Yet we are seeing that part of the companies have lowered equity ratios. And then when we look at banks, they have really supported the business sector, overcoming liquidity shortages. They also have buffers in case that companies should have difficulties. Also here, we do see very solid core equity ratios and basically buffers for the time to come. When it comes to the public sector, still very effective. But when we think about the transition going forward, of course we have, and we had this topic come up earlier, the transition under circumstances with the handicap, because we are seeing an aging population and we do have public sector investment needs that will make it more difficult to consolidate public debt. Growth outlook, we have recently revised slightly downward our forecast for this year to around 3%. And next year, we're foreseeing a fairly strong growth again, because the value chains and the shortages of raw materials have stayed more important than we initially anticipated. So the demand is not gone, but it will kick in most likely slightly later, which explains why we see relatively strong growth next year still.
You don't think there's any danger, you don't think there's any danger that these increases, say, in petrol prices that we've seen lately, in household heating costs, and indeed a lot of raw material costs in general, you don't see any danger that this is going to feed through into wage demands over the next 12 months?
Well, of course, this is a topic that has to be looked very closely. When we look at inflation expectations so far, which I think is the really important factor to look at, they are very well anchored around 2%, and actually below 2% for the years to come for the Eurozone. I think these is a really important factor. Of course, you may now say that can change quickly. So we need to look at it very carefully. But I do think there are good reasons to believe that the spike in prices is rather transient, needs to be watched carefully. We do have basis effects comparing inflation this year to inflation last year, and we do have special effects this year. Energy prices in Germany dropped by 6.3% August last year compared to the previous year. We tend to forget that these days. They have increased, that's true, this August relative to last year by 12%. So there is an increase, and we do have these effects. We also have the impact currently of the lowering of VAT rate last year that was temporary, and since July 1st this year, this hits us in the opposite direction. So
you're quite right. It's a very level-headed debate at the moment in Germany. Just a last question before going over to Laurent, please, Fritzi, on the outlook. Without going too deeply into the politics, do you think the new coalition will really be able to give a kick to the German establishment regarding digitalization? There's been a lot of talk that you know about. Some of this is overdone, about Germany being too old-fashioned and its industrial structure, the new technologies being dominated by China, the United States. We have Tesla starting up a new plant in Brandenburg with 10,000 people. We had Volkswagen now talking about possibly needing to shed 30,000 workers in the next few years because of the competition from electric car manufacturers. Are you optimistic that the new coalition will actually give a real push towards some of these more modern industries?
Well, you know, David, I think it's irrespective of which government is to come, and it's actually linked to the fact that I mentioned before. Germany has to move in the direction of the green transition, and the digital transition is in the same way imminent. And actually, I think when it comes to the transition towards transformation towards climate neutrality, Germany has a very good starting position as second largest exporter of climate protection goods. But it's also true, this transition, and for both, we just published a paper regarding the financing needs, the investment needs to manage this green transformation, and we come to a number of 5 trillion euro until the mid of the century to reach climate neutrality. Basically, this is by the private sector and the public sector, and it's not only additional investments, but it's also investments that need to be done anyways. But these are huge numbers, of course.
Yes, well,
Also,
I want to come back to that.
Germany has to catch up. Sorry, and just to mention this, I think to be successful in this, we do also need financial instruments that allow to shift risk between market participants, and that depends very much on the degree of maturity of technologies. You mentioned new technologies. I think to be able to manage this transformation, technological innovation is at the core of being able to succeed. And I think that financial markets play a really important role. And also when it comes to ECB, that's why I really liked the keynote. The recognition of risks and then also reporting standards are key to be able to basically move in this direction.
Well, I'm pleased about that. And in fact, Robert may still be on the line, so he may have received those words of praise from you, Fritzi, which he'll be delighted about, I'm sure. And I would like to come back later to this whole question about financing this and the financial instruments, and indeed these whole shadow budgetary accounts that the Germans now have to get around the debt brake. I'd like to come back to that. But Laurent, thank you for waiting until your turn to speak. Now, you've had this interesting career whereby you've also been at the European Central Bank. So you look at all this from a monetary as well as from an overall economic point of view. You're now a principal advisor in the economics department at the EIB. Where do you see the EIB coming in to promote this corporate and technological renewal? There's a lot of new instruments that the EIB has now, well before the pandemic, started to build up. Are these proving to be fit for purpose? Is the money coming through? And also, is there going to be a danger that there's almost too much money rushing into places like Italy from different sources? And is there a danger that it won't be monitored and spent in an appropriate way? Could you tell us that from maybe the corporate standpoint, please, Laurent?
Okay, thank you, David. Good morning. I'm very pleased to be part of this panel. Let me take some distance compared to your question, and let's have a backward-looking analysis before entering into the future. So first, I think the worst has been avoided during this COVID-19 crisis, and this brings some confidence into the capacity of the policymakers to monitor crisis situations. In fact, during the crisis, we have implemented massive support programs. We have implemented guarantee programs at the level of the sovereign as well as at the level of Europe with the European Guarantee Funds. And these programs have been very successful in freezing the corporate ecosystem, avoiding massive bankruptcy, and maintaining the work-employer relationship. So the risk of scarrings have been minimized throughout the implementation of this policy support program. This is a good point to bear in mind. And therefore, the rebound is relatively quick and is relatively impressive so far, at least. Still, you have to bear in mind that the current situation is pretty much dependent on the policy stimulus which is still in the pipe, be it the fiscal stimulus or be it the monetary policy stimulus. And there are situations, there are scenarios whereby you may have to remove relatively quickly part of the stimulus, and this may lead to disorderly adjustment and potential crisis situation. So when phasing out the policy stimulus which are in the pipe, it's very good to bear in mind that the recovery still rely to some extent, to a large extent, on them. And it's nice to recall the mistakes which have been achieved in 2010, 2009, following the great financial crisis, which paved the way to enter the sovereign debt crisis in Europe.
So, sorry, just to drill down into that, you mean the mistakes were made by the ECB, particularly in 2008 and 2011, but also by the governments in withdrawing their stimulus too early. Are those the mistakes that you mean?
Yeah, both monetary and fiscal side, and maybe more fiscal side than monetary policy side, I think. So when you remove a huge policy stimulus, the phasing out has to be properly designed and coordinated, and it's difficult within Europe because you have a mix of policymakers at the fiscal level. Then, if you manage to get the recovery on track, self-sustained recovery, while having partly removed the policy stimulus, you can look forward to the future and you can start tackling with the issues of climate change, of digitization. And in fact, at the EIB, we have a survey which tends to show that part of the stimulus which has been implemented during the crisis may also foster the investment capacity for corporates on the upturn cycle. So even if the policy stimulus has mostly been untargeted, so not dependent on policy achievements, it has helped corporates to withstand the crisis in terms of avoiding bankruptcies, and may help corporates to also leverage to achieve the investment needed to pass the century, to pass the next years in terms of digitization and climate change. So far, we can be relatively confident. But again, my message is that it's very fragile, the recovery is very fragile, and our capacity to really foster the green transition and the digitization of the European economy is dependent on a proper upturn and the long-term sustainable growth.
If I could just focus on one of the things you said about the need for fiscal and monetary cooperation. This was a point that Didier Borowski was also making. I put this to Ricardo, and I said it was almost like a race against time. Ricardo thought that was a little bit provocative, and he maybe wouldn't put it quite like that himself, but I think you'll get my point. Do you think that the ECB, with all the mechanisms that they've built in, and also with the sensitivity, shall we say, of their president towards political issues, do you think that the ECB is going to give countries enough time to get their reforms and their growth programs underway before a tightening does take place? There is an alternative possibility, of course, that the United States has to start tightening earlier than imagined. We can see the tapering now starting to get underway in the next few months. There is a danger that this could be taken out of the Europeans' hands. How do you weigh up those two risks, Laurent?
So the ECB is there to guarantee price stability. Okay, so the major risk is the risk whereby you have inflation which starts being entrenched in wage bargaining process, and therefore start being self-sustained. And then the ECB would have to react to that because of its mandate. I don't think the main risk is the US situation. We have seen previously, before the COVID-19 crisis, we have seen an upturn in the US economy with a tightening cycle in the US economy that we have not seen in the euro area. So euro area is a relatively big open economy and conducts its own monetary policy for its own goal of price stability. And you can have a decoupling between the euro area and the US economy in terms of monetary policy. But again, the main risk that I see for the ECB monetary policy is the fact that inflation may be higher than expected and more entrenched in inflation expectations, leading to higher wage claims, wage negotiation, and therefore this would need a reaction from the central bank. The decoupling with the US is not a major issue for me. It has happened in the past already.
Yes, well, the whole point about setting up the European Central Bank, after all, was to make Europe less dependent on monetary and fiscal developments in the United States. So it would be rather surprising if Europe didn't make use of that. Could I just go back to you now, Ricardo? We've had a number of different comments also about reforming of the Stability and Growth Pact. And you mentioned yourself, Ricardo, the way that the Italian government now under Mario Draghi is going to take a fairly gradual approach towards the primary surplus. To what you also gave the very interesting political point of view that Mr. Draghi seems to be settling in quite well to his role as a central banker turned into a politician, and maybe seems to be quite enjoying it, and maybe wants to stay on for a bit longer. Do you think that Draghi is going to really himself, aided by people like Fabrizio Carracci and so on, is he going to really make an effort himself to go to the helm of the European project in terms of reforming some of the principal apparatus of the Economic and Monetary Union? You may need to.
I think that the topic of fiscal rules will definitely be on the agenda. We are expecting a first statement by the European Commission within the next few days. And probably the fact that we are in a pre-election phase in France and in negotiations on the formation of a new coalition in Germany means that things will pick up over the course of next year. We are under the impression that in the first half there's no particular desire to put this issue at the center of the policy work that will be done at the European level. But we'll see. But I think there's a broad consensus that the rules need to be reformed, that they're too complex, they're pro-cyclical in some respects. So I would expect that there will be an attempt to at least simplify and perhaps make the debt rule more realistic. In other words, ask countries to still move towards that 60%, which now looks very, very far down because of the debt accumulated during the pandemic. So it will be done probably on a longer time frame. But I think there is also consensus that we do need fiscal rules and we need to bring down our debt to GDP ratios. And that's also true of what was written in this recent update of our stability program. There's a clear statement that we aim to go back to a primary surplus, and we aim to bring our debt ratio back to the pre-crisis level by the end of this decade. We do know that because of demographic factors, there will be a tendency, other things being equal, for debt to GDP ratios to go up in the next decade as baby boomers retire. The projections, the medium-term projections for the pension system are not very reassuring. They are better in the case of the Italian pension system on a long view, but we need to get to that long term. Reason being that our system foresees the gradual shift to a mechanism whereby pension benefits will depend upon contributions paid over the course of one's career and the growth in GDP, in nominal GDP. So if GDP grows faster, then the benefits will be higher. Okay. Now, the question mark I have on that particular point is if pension benefits end up being insufficient, is that a credible projection? But again, we are talking about projections 20, 30 years down the road. The problem we have is within the next 10, 20 years. So bottom line is, we have climate change considerations that could create economic shocks. We have had a pandemic. We know that epidemiologists had been saying for years that they thought a pandemic was a risk. Can we rule out anything like that in the future? No. So my own view is that if we wish to ensure the sustainability of the public finances and of our pay-as-you-go pension system, we do need to improve the sustainability of public debt. And we cannot expect that central banks will keep, in a way, monetizing government debt. There will have to be a phase of normalization that I think is, I guess, a given. You never know. We would have said the same thing 5 years ago, and now the balance sheets of central banks are a multiple of where they were.
Well, of course, you do yourself have this experience before you joined the Treasury of 25 years on financial markets at places like JP Morgan. So you've seen all this before, haven't you? You do know the way financial markets do have a habit of coming back to bite you. I want to go into the issue about spending the money from the Next Generation Fund, which we'll do in a moment, Ricardo. But first of all, I just want to go back to Didier and to home in on what Laurent was saying and others were saying about the outlook for the next, say, 6 months. You've spelled out you don't think the ECB should abruptly tighten monetary policy. Do you also think, Didier, with the presidential election coming up in April, do you think that there won't be much appetite really to put some major European issues onto the agenda for the next 6 months, because Mr. Macron and his team will have other things to worry about? Also, how big a problem might there be in the election, not necessarily from the far right, but how much do you think there may be a splitting of the vote on, shall we say, the center right or the center left? How vulnerable is Monsieur Macron?
As for now, looking at polls, we can only look at polls. It seems that if the elections were organized next month, Macron would probably lead easily, the election and win the election. But having said that, we need to wait for 6 months, and it's going to be complex, I would say, to continue on the agenda, on the reform agenda, and on the European agenda in the middle of an election that is still uncertain. So the second round is still very open, as you know. The fragmentation of the policy, of the political landscape remains very elevated, especially in the opposition. So it's too soon to say, but to answer your question, just want to say that there is also a clear commitment from the current government to have a pro-European agenda. So my take is that they will want to show that they will use their time, during the first semester of next year in order to boost, I would say, the European agenda. So that's my take at this stage. Having said that, you have clouds on the economic outlook in the short run, especially coming from commodity prices. So you have, as it was mentioned, all the second round effects that could materialize, but basically we know that it's more a supply side shock that we are seeing, and that it may at least temporarily weigh on GDP growth and generate some volatility in markets. So.
There's something just before going on to Fritzi, Didier, on the European side. It was quite conspicuous that Mrs. Merkel did not react to the Sorbonne speech that your president made about 3 years ago, where he put forward quite a dynamic, quite an ambitious approach for Europe. There was really no reaction at all from Mrs. Merkel and her people. Do you expect that Scholz, were he to be confirmed, were he to become the Chancellor before the Christmas holidays, that he will actually go to Paris straight away, and he'll probably go to Rome as well I think he'll give London quite a wide berth. He will miss London out of his itinerary. That would be my view. But do you see the opportunity for what you might call a triangle, a three-cornered relationship between Paris and Rome and Berlin? Because Scholz, in many ways, will be quite a junior person compared with Mr. Draghi. Draghi is very much his senior.
Yes, but Scholz was finance minister, so he's well known in Europe. I guess yes, we can hope for a better relationship, I would say, between the major Eurozone economies. I think the game changer in Germany is clearly the participation of the Greens. So the Greens in Germany are very close, I would say, to what Macron and his government had in mind for Europe. So at this stage, we can hope, I would say, for something that is really a pro-European agenda coming from both France and Germany. But we have to wait still, for the elections in France.
I think it's true, isn't it? I think it's true that Macron actually received Madame Baerbock and Monsieur Habeck for a couple of hours by themselves 2 years ago, before anybody really knew who they were. I think that's true, isn't it, Didier, that Macron did reach out and put out a hand of friendship towards the Greens?
Yeah, I think something which is very important and that is not very well understood is that the Greens in Germany, I would say, are very close to the center. And my point is that with the Greens and the SPD in Germany, you will probably have more pro-European policies than with Angela Merkel. Having said that, we should not be overly optimistic. My point is that you will have the FDP, and we know that the FDP is much more conservative. So even regarding looking at fiscal rules, and the new European fiscal framework, I think it's going to be, it's not going to be a huge change. It will be a very gradual change in Europe that we will see.
That's right. Well, Fritzi, again, we don't want to tempt you onto the poisoned fields of politics. That's not your field. But you did say something very interesting before, that you felt that the inflation rate would be quite under control next year, despite this spike that we've had. Why is it that the inflation rate now slightly more than 4% in Germany, because of these basis effects? It hasn't raised any passions at all, as far as I can see. People don't seem to be getting worried about it. You had it in the election, one or two cases. Some politicians were trying to make a big thing out of inflation, didn't really seem to work. And also, is it true that the new finance minister, if it's likely to be Mr. Lindner, will he be conservative, or will he be a bit adventurous? Because if you look at the FDP manifesto, it's actually got some quite strong supportive words about Europe. The FDP, the Liberals, say they want a federated Europe, whatever that is, but they have very similar words to the Greens regarding Europe. So without getting into the politics, which is not your area, could you just spell out your future from the point of view of if you were the finance ministry advisor, what would you be advising Mr. Lindner to do regarding France and Italy?
Well, yeah, I mean, these are, of course, very relevant questions, and we still don't know the outcome of any of those negotiations. I have the impression that there is an increasing recognition that many of the challenges that we are facing can only be answered in a European context. And I think we have seen that during the pandemic. And maybe one can also say that there are some learnings, as hard as this crisis has been. For example, when we think about next generation EU, I mean, it's fantastic that we have moved in this direction. And now the challenge is, and I think this is a topic that we often don't mention when we talk about fiscal policy going forward, how efficient fiscal policy is. And I think there is still a way to go towards a common understanding of what fiscal policy can and should be able to deliver for citizens in Europe. So when you ask me, I would say that these are the areas where really there is need to work on to basically set clear the common basis of fiscal policy in Europe. What are the expectations with regards to efficiency? What is the overall view on consolidation? Because the trade-offs are clearly very difficult. Basically, a consolidation that's fast enough so that the war chest is filled for the next crisis, yet allowing enough room for the investment needs that clearly are there when it comes to the green and digital transformation. And when we think about it, in those areas, Europe, in the geopolitical setting that we are in, will only be able to succeed when we come to a common set of policies in those regards. So my sense is that also based on the experience of the crisis, there is a good chance that there is a great willingness to move in the direction of more coordination within Europe.
Yes, I think the new finance minister will probably have to be swept along by events. Please, those who would like to put questions, we've got about another 20 minutes before this session ends, please do put questions. I've got one question already from the audience, which I'm going to put to both Laurent and Ricardo, because it's something that both of you can answer. Laurent, the questioner says, what mechanisms are being put into place to make sure that the European funding, whether from the EIB or whether through the other new mechanism from the Next Generation Fund, are actually getting through to the aim that they have and actually producing better stability, but also better grounding, better foundations for genuine investment? You know, how are you monitoring this to make sure that the voters in the north, for example, do not think this is all wasted money?
So if I can answer this question, if you speak about the European Commission, it's another process. It's so the state deploy a program that is submitted, that is stamped, and then the money is allotted. But maybe Ricardo can say more about that. If we speak about the EIB, what we do is that we have technical experts, we look at the requirement of the project, and we have due diligence. So we monitor the achievement of the project when we finance it. So the bulk of the problem is ex ante to assess the long-term benefits of the project, its climate impact, for example, its carbon impact, or social impact also. We have many criteria that we implement to scrutinize the project and select it, finance it, and then we check during the conduct of the project that what has been said is really delivered. So the main issue is to find a good project. And to financing liquidity is not anymore the major issue at the current level in Europe.
Well, let's go to Ricardo on that. And I've got another question from you again from the audience, Ricardo, but if you could just answer that question in a more general sense. I recently spoke to a senior Italian policymaker who said, we're getting all this money and it's almost without any strings. It's almost without any conditions. The only condition is, he said, is that we have to make sure that we spend the money wisely and we have to account for it as well. So what efforts are you making at the Treasury, also together with other ministries, to make sure you can give a proper public account of how the money is being spent?
Okay, one of the first decisions that were taken following the presentation of the plan was to create a central office for the recovery plan here at the ministry in our accounting department. So it's not Treasury, it's our RGS accounting department that has this office, plus there is another one that will monitor the effects of the plan, including on things like gender equality, north-south divide, and so on and so forth. So in addition to that, these bills that were approved by Parliament also created a central coordination unit at the Office of the Prime Minister. So the challenge now is to ensure that these various parts work together as efficiently as possible. Draghi has given an impulse to the works with, for instance, a meeting of this task force on the recovery plan last week to discuss all the aspects of the plan that have to do with education, formation, reforming technical education in Italy and universities, and providing more resources for the research and development. Now, I think one should consider that the plan includes hundreds of milestones and targets. So those milestones are not just, say, ensuring that some draft legislation is delivered to Parliament, but it's also complete ABC. There are phases that are necessary to ensure, for instance, that you do have a smart grid project. Because if you don't change certain tender mechanisms, public procurement, or regulations, that investment might not happen. But the plan has hundreds, as I said, of these milestones, so it ensures that things will be done. Now, what this accounting approach and monitoring approach, in my opinion, doesn't totally ensure is the quality of what we do. And that's why I think there's a role also for us to tend to have more of a strategic / policy making approach to ensure that what we do is effective. And I go back to what I said earlier. This is not just about having a temporary boost to aggregate demand. It's like renewing, changing, modernizing the economy and infrastructure to ensure that we can really take up the challenges for the coming years, beginning with ecological transition, but also digitization. So I think there, the quality of what we do, the effort that each of us will put in will be key to ensure that there is not only quantity, but also quality to what we do.
And will this be made public, Riccardo, or say to legislators and to voters in the north of Europe who are habitually somewhat skeptical about these spending programs? And then linked to that, and I apologize for giving you two questions in a row, but it's come in from the audience. And an audience member says that there is this issue about the special interests in Italy who are not in favor of some of the really necessary reforms, reforming the justice system, reforming the planning system, and so on. These entrenched interests, which habitually in Italy have been very strong. How will Draghi manage these interests? Because they could actually all be opposing what he's trying to do. The questioner says, how will Draghi solve this conundrum?
Well, on the first issue of will the money be spent effectively, and what we tell northern voters.
Will there be a scorecard?
First of all, one thing we have to bear in mind is that here we're talking about primarily the grants component of the plan, right? The grants component, however, will be later covered by an increase in own resources. And it will be a transfer from the north to the south only if Italy continues to be below, say, Germany in terms of per capita GDP. But Italy is around the average, the European average. Italy is not, on a percentage basis, is not at all one of the main beneficiaries of this plan. In absolute terms, Spain gets slightly more than Italy. In relative terms, countries like Greece get a multiple of what Italy gets. So we need to put things into perspective. In addition, when we activate, say, we invest, the green energy sector, we invest even more, say, in wind farms. At the moment, we don't produce wind turbines, which is one of the things that upsets me. When I look
at the industrial policy aspect,
they're made in Denmark, they're made in Germany. So Germany will ultimately benefit from the impulse to economic growth and infrastructure. Otherwise, I believe they would have not supported the approach. Yes. Finally, in terms of the obstacles to reforms, clearly, the better the reforms are, the more there will be opposition to them. There's no question about it. Now, here, I think the key is trying to be as consensual as possible, which Draghi seems to be doing, even beyond what I expected personally. And secondly, convincing people that this is yielding some results. And that's why, going back to my very initial comment, when people rave about the 6% growth forecast we put this year in our official documents, my first reaction is, well, we are coming from an 8.9% drop. What do you expect? We are still below relative to Germany. If we take as a parameter the 2019 real GDP level. But I don't mind that there is this interpretation, this rosy view about what's going on, because I think we need all the support we can to show that the policy that's being followed and hopefully the reforms that will come are bearing fruits. The perceptions are very important. And I think the last few days have shown that any decision where you go a bit out of this very consensual approach, hugging everyone, and you do something like what the Draghi government did. In other words, you create this so-called green pass, and you say, yes, if you don't have it, you cannot go to work. Essentially, even you essentially have to lay off your cleaner, for example, if he or she doesn't have a green pass. Okay. Now this is leading a minority of Italians, because we now have 85% of the population vaccinated. Okay.
Yeah, so I can see. I'm sorry. I'm going to have to speed up a bit, because we've got a whole host.
People are very angry, and
yes,
so that shows that even the slightest, maybe it's not a mistake, but things that are a bit out of this line of least resistance can lead to reactions.
Yes, you might say it's the perils of success. We've got about 3 or 4 questions now coming in from the audience, and only about 10 minutes left. So Didier, a question to you, please, is on China from the audience. Is the new EU, with this new constellation we're talking about, is it going to be able to forge a proper consensus about how to deal with China, both in terms of Chinese investment into Europe, but also dealing with China more generally in the trade and economic sphere?
Yes, you know that China is one of the main trading partners of Europe. So there is a special relationship between the EU and China. And I think you have to separate and to think the geopolitical concerns with the interest coming both from China and from Europe to maintain a close relationship on trade issues. So that's the most important point, I think, to say at this stage. We live, in a multipolar world. We understand that you have tensions between the US and China, but the European Union has something to play in the middle in maintaining a close relationship regarding.
And you don't expect the German Greens to kick up a big fuss about China, because they've been quite activist on the question of, say, human rights and the Muslim minority in Hong Kong and so on.
Yes, but we have also to understand that China has been a key engine of growth for Germany. So my point is that that's sure that Germany needs to reinvent themselves, and Germans need to reinvent themselves. But at the end of the day, I think we need to be realistic. I mean, China will be, the major growth engine in the coming decade. One of the major growth engine, even if there is an economic slowdown that is ongoing. It is a major trading partner. So we need to be realistic when it comes to on the economic side. Now, what you mentioned on regarding values and on the geopolitical side, that's sure that foreign policy, the foreign policy in the European Union has to be more clearly defined, and it's going to be a hot topic, I would say, for the coming years for the European Union.
Okay, well, so Fritzi, a question from the audience, actually very much along the lines of what I put before, but will there be any change in the debt brake in the constitution? And if not, how is Germany going to finance these enormous programs? Will there have to be more off-balance sheet financing and more financial engineering?
Yeah, that's a very relevant question. It's true, the debt brake is in the German constitution, and it will be very difficult to change it. I think that there is a very deep discussion ongoing on how to proceed with the debt brake. I think there are a couple of questions that are really very relevant. One is, of course, that basically we have the debt brake in Germany. It's basically in the European context would have to be changed if it were to be changed. And then I think it's really also about what are the possibilities of financing investments within the debt brake first, and then basically thinking about which type of reforms are necessary. If the debt brake is being touched, it will be very difficult, and will have to be consensual.
Well, I don't think it will be. So let's assume nothing will happen. Nothing will happen there. But will the KfW have to be even more inventive than usual? Because one of the institutes, der Deutschen Wirtschaft, has said there's 100 different shadow budgets going, totaling 100 billion euros, which Germany has set up very imaginatively. It's going to be quite difficult for Germany to lecture other countries about the need for fiscal prudence when Germany itself has been so extraordinarily imaginative in setting up all these off-balance sheet vehicles.
Yeah, I think that it will be really difficult or key to discuss what are the investment needs and what are the right instruments. No, and then within this all, also to maintain fiscal prudence. There are very difficult trade-offs to be tackled.
Yes, well, I'm looking forward to seeing what the advisors to Mr. Schultz say about all that. Laurent, quite a difficult question for you, bearing in mind you did work at the Banque de France before, but the questioner says, given the need for financial monetary coordination, which you have mentioned, Laurent, is Madame Lagarde exactly the right person to be leading the ECB at the moment, rather than, say, a monetary economist?
Well, I think so far she delivered. No, she delivered on the smooth reaction to the crisis. There is no reopening of the sovereign spread. The APP has been, the new APP, the PEP is ongoing. It has been accepted by governing council members. And then she has view on the long-term growth path of Europe. So she has view on the gender diversity, on the green transition, but on the monetary policy side, so far, she delivered on her mandate.
Yes, she seems to be taking a very holistic approach, I would say. Didier, how would you answer that question? And then there's a final question for Ricardo right at the very end. But what would your balance sheet score? She's coming up to her 2 years now. Didier, what marks out of 10 would you give her?
I fully agree with what Laurent Morin said. I mean, she has clearly delivered. There is this new strategy review. We understand that there are new long-term objectives. So now it's time to clarify perhaps the greenization of monetary policy, because you may have many technical questions behind these issues. So that's the point. But basically, you have a recovery in the Eurozone, thanks to the ECB in particular, but not only. The PPP, I would say, investors have welcomed that and understand what she says. She's communicating very, very well. Now the debate is about, now the greenization, I would say, of monetary policy. What is in the pipe? More clearly, that's going to be the hot topic, I would say, for investors in the coming years.
Right. Yes, I like that phrase, the greenification of monetary policy, and that's going to be the subject indeed for the next session. So, Ricardo, there's a question from the audience, and then there's one more question that's come in, and this is the question about the North-South divide in Italy. Will the new funding somehow be able to help Italy to overcome this North-South divide? Because the problem is that in the South, there's often only a limited project and investment capacity. So you might send the money there, but it might not do any good. How are you going to get over that problem, Ricardo?
Difficult question. I would say that the development of infrastructure for mobility, but also social infrastructure, is our best bet, and education. It's a big effort, but I do think that both in terms of activation of economic activity and employment, and hopefully what may come after the plan, this is no question a big opportunity, and I'm hopeful that this time it won't be wasted. It's clear that bringing more infrastructure, better education, more opportunities is the key thing, the key strategy. However, there are many other flanking policies that need to be implemented, including the rule of law, transparency in the public administration, and that is, in my opinion, a long-term effort. We cannot expect to turn around certain parts of Italy just in 5 years, but hopefully we'll make significant progress That is the idea.
All right. Well, I do want to go back to you just for one more final question, Ricardo. But before that, a question has just come in from the audience, which I'm just going to ask you, Didi, to answer, since you're the head of global views. So you have to have an answer to everything. And the listener says, what is the panelist's view that some countries such as Poland and Hungary could derail EU convergence on a number of really critical points like fiscal policies or climate change or the role of the European Court of Justice?
So there is a risk, but we believe that it's not that important. My point is that if you look at the recent debate with Poland, both from economic and geopolitical reasons, Poland has no interest, to leave the European Union. So they need to be realistic. And in addition to that, I think it's key also to look at polls. I mean, what polls say about, the support to Europe. When you look in Poland, for instance, with the recent headlines, in Poland, most polls tend to support the European Union, 90%. So, and you have elections in 2023. So there are risks, obviously, but at the end of the day, I think the authorities will need to be very realistic regarding, what their own population wants. And the good news is that with this crisis, population in Europe saw that their governments and the European Union was there, in order to support them. And at the end of the day, the support for Europe has increased in many countries, even in countries where governments are, as we all know, very Eurosceptical. So my point is that
that is quite clear. That is quite true. And of course, the spectre of queues in Britain and problems with people getting goods on the supermarket and so on has actually led to a lot of the resistance to the EU in other countries dissipating. So no doubt Mr. Johnson requires a European medal, I would say, for his services towards European Union, because Britain leaving the EU has given a major fillip to European unity in many countries. The final question, Ricardo, again, apologies to the others that you've had a lot of questions, but Italy is in the center of attraction at the moment. You said right at the beginning, you seem to be indicating that there might be a presidentialization of the role of the Prime Minister in Italy. And if that was to be the case, then maybe Mr. Draghi wouldn't become the president and there'd be another replacement for Mr. Martorelli. How likely do you think that is? And I was very pleased you put that forward, because it was exactly the question I wanted to put to you, but you answered it before I had put it. So how likely is that? This is going to be the final question.
I don't have any inside knowledge, nor would I be able to share it, but I'm just an observer, and this is what has been discussed also among Italian political commentators. Namely, it looks like, especially the center-right parties, want to push Draghi towards the presidency, so that he frees up, the position at the office of the prime minister. Perhaps someone a bit weaker in terms of image or a clout takes the position of prime minister until the next election. And they also seem to want to replace some of the current ministers. Of course, this is a sign of very scarce sense of responsibility, because this government only came into office in February. So even by Italian standards, changing government now or having a reshuffle will be a bit too early. They need to wait a few more months to reach the average of 1 year and 1 month or something like that. But no, jokes aside, there's been talk that Draghi, after all, might accept to be put forth as presidential candidate when Parliament elects the next president. And at that point, the system would become more presidential, more similar, say, to the French system, without any change in the constitution, but simply by virtue of Draghi's prestige and credibility. But I'm not saying this will happen. Personally, as an Italian voter and citizen, I hope that Draghi will continue to be prime minister until the elections in 2023.
Good. Well, thank you for being so open on that, Ricardo, and thank you to all the panelists. We've overshot by a few minutes, but I think that's inevitable since it's such a wide-ranging subject. So Fritzi from Frankfurt, Ricardo from Rome, Laurent from Luxembourg, Didier from Paris. I'm speaking from Berlin, so a fairly European setup. I'd like to thank you all for being so open and thoughtful in what you had to say about both the short-term and the longer-term issues. We look forward to getting together around a proper round table in one of our countries fairly soon. I would like to do that. The last time we had a big meeting was at the KfW in Frankfurt, Fritzi, in March 2020. It wasn't so long ago. So we look forward to getting back to this rhythm again. Thank you all very much. It's going to be a 15-minute break, maybe slightly less than that. Maybe it's only 10 minutes because you'll come back again at 12:35 continental time or 11:35 UK time for the next round, which will be led by Ellie Groves. And that's going to be on central banks and tools and practices above all for the ESG. So please do go away for a short time and then come back, or just don't go away at all and stay on the line. And thank you all very much for being so open. And I look forward to the next phase in our discussion. So David Marsh here from Berlin saying goodbye to everybody. And thank you all to the panelists for being such a very, very good team of discussants. Thank you very much indeed. Goodbye.
Thank you. Bye.